If we want to understand what's happening in the economy, then we need to know what happened back in 2007 and 2008. In this video, we're going to talk about just that. I think it's important that we look at how a bank crisis can unfold when we're being told that the entire system is safe and sound. You came here for the truth, so let me unveil that for you. Every single day you look at the news media and they say to you, you don't have to worry, buy this and this. And of course they need to feed that to you because their advertisers pay the bills. And that's simply the way this works. But all along, what we've been told hasn't exactly been the truth. Let me show you. How GM got 5,000 workers to leave their jobs within a month without a single layoff. They've got something called voluntary separation program. I kind of think that's what some wives ask their husbands to do. But anyway, the whole point here is that they basically said, we're going to give you the severance, we're going to give you this package, and healthcare, you go your way, we're going to go ours. Because they need to have less employees for different reasons, one reason or another. And this happens to be just one company that they didn't have to, quote, lay anybody off. But what is it? Many companies do this when they say to their employees, look, this is just the way it's going to work. We don't really need you here. It's probably best that you quit. And somebody would say, well, no, I'm going to keep working, I'm going to get paid. But they make their life more difficult, and they don't give them a raise at the end of the year, and they don't give them a bonus at the end of the year, and people get squeezed more and more, and they give them all the worst jobs and everything. This thing happens every single day. And so why isn't there a state of abundance anymore? Why isn't one company or another, these tech companies, trillion-dollar companies, giving away all the perks anymore? Something changed. Do you remember? Let me show you. Here it is. If you look at McDonald's, temporarily shuts U.S. offices as it starts notifying workers of layoffs. The burger chain's corporate employee reductions are part of a broader restructuring. This is a company that serves hamburgers, chicken, and all these different things every single day. They don't have a shortage of that. Okay, there's people coming in and in and in. They've got customers in walk-through traffic, ordering online, all these different things. They don't have that issue, but something else changed. Richard Branson's Virgin Orbit files for bankruptcy after failing to find funding. Now we're getting to it. California-based company forced to cut 85% of its workforce after struggling to secure investment. Now this is a fringe thing. There's not many companies, shooting rockets up in the sky and so on. But the point here is very clear, and that is the central banks changed their policy. Tim Cook's no layoff strategy wears thin as Apple presents some workers with a choice: reapply for your job or get laid off. How does that sound? Does that sound good to you? Yeah, no, we're not doing layoffs. Don't worry about it. Oh, by the way, you gotta reapply for your job, and if you don't want to do that, you're gone. What is that? Isn't that just a layoff? I mean, come on. So this is the way I see it right now. The central banks changed their tune. They changed their policy. They started increasing interest rates, and that made borrowing costs go higher. We are seeing the ramifications of that. We see it through the bank crisis, just like we saw during the financial crisis. It started with a series of events, not just one. It wasn't Lehman Brothers. It wasn't Bear Stearns. There were all of these things that led up until that point. And of course, rising interest rates was all part of that. The housing boom was going nuclear. It was going berserk. And they said at one point, there was no worry. We didn't have to be concerned. It was all contained. It was just subprime. And then it started to snowball, and snowball. And the rest is history. But it happened inside of essentially the financial system, the part which lending and loaning became an issue. $2 billion loss at Sweden's pension fund has stocks chief put on leave. You perform bad, you're out of there. It's just the way it works. Doesn't matter if you're at the bottom, you're in the mailroom, or you're the CEO. If you don't perform well, they kick you out. Just like coaches on sports teams, if the team doesn't play well, they fire the coach. It might not even have been his fault, but they need to get rid of the leadership in order to instill confidence once again. Usually the next guy that comes in, he's real tough, fires a couple people, and they get the business. That's the way it works. Sweden's biggest pension fund, Alecta, has put equities chief on leave and announced plans to reduce risk exposure after reporting $2 billion in investment losses tied to last month's US banking crisis. Do you see how this works? How the dominoes fall? You have an issue raising interest rates at a time in which they told us inflation is transitory. Oh yeah, sure was. And so we see the effect. It has an impact on SVB and Signature and all these different companies, Credit Suisse, Deutsche Bank, all these different things. Those companies are directly affected. But there's the knock-on effect that these other companies were maybe overexposed to one of the products that they sold, or maybe just directly with those banks or linked up with them, and now you see the problems. Big things, right? Now, it doesn't necessarily mean the pension fund's going to go bankrupt. No, but now they lost $2 billion, they have to make that back. So are they going to start taking extra risk? Are they going to start piling on some sort of crazy derivatives in order to get back what they lost? It's possible. That's usually what degenerate gamblers do. We'll see if it happens the same way with these companies, fund companies and pension funds and so on. Morgan Stanley analysts are forecasting something, quote, worse than in the great financial crisis for commercial real estate. Because right now what we're seeing is commercial real estate being impacted to a great degree. That is something that wasn't quite as bad in 2008. But now what we're seeing here is commercial real estate. Look, let's be honest. You've got a situation in which we have a lot of hybrid working. And that means the workers in the downtown office core, they are only working from their actual desk, let's say 3 days a week, 2 days a week, whatever the situation is. And what's happening here is, in many cases, what I've seen, they've contracted on the amount of floors that they need, the amount of real estate space. So let's say they rented 10 floors in one of these big buildings. So now they got 10 floors. Well, okay, people are only working there 3 days a week. They chop that down to, let's say, 5 floors. They get that down to 5 floors. Maybe they change the configuration of the desks. They make it at work. Now they don't have that 5 floors. That is something on that company that's increased productivity, that's saving money. But to the, let's say the landlord or where the debt lays right now, that becomes a problem because you have to get a new tenant in there or you've got big trouble. And for a lot of businesses, they don't have that tenant there. So we're seeing some of that pop up today. Why? Again, increasing interest rates as part of the whole quantitative tightening policy. We are seeing the effects of that just about everywhere. So keep an eye on it and I'll keep you informed right here on this channel. Stay tuned, hit that subscribe button so I can bring you the latest and greatest. Now I got a couple things. You got to check this out, okay? America only had a handful of billionaires 40 years ago. We're now creating centibillionaires, and unless we tax them, trillionaires. And the article makes the claim that basically people with this amount of wealth use it to consume more power. They want to take more, they want to have more control, more power, and so on. Okay? And then along with this, millions of Gen Z grads have never had to pay monthly student loan bills, considering the federal payments have been paused for more than 3 years. That will change soon, and it will be a shock for many household budgets. So what we're seeing here, 45 million payments have to resume. Some of those will be unable to be paid back. So what's going to be the effect of that? Well, we already got $1.7 trillion worth. So the reason I mention this is part of the fact that we've got a system that is completely fraudulent. You can't pay back $1.7 trillion. Just like the government can't pay its bills every single year. The amount of tax it brings in every year is greater than the year before, but they can never seem to pay their bills. Ever. They never do it. Then you have individuals who are basically stuck because inflation has gone up. They can't pay for their food, their energy. Do you think they're going to pay for their student bills? They're going to pay for their food and their energy before they pay the student bills. They're going to pay for their food and energy before their credit cards. We're watching what happens that essentially is done on purpose. It's a squeeze. You got to realize this. We go through a cycle, okay? Some people end up better off at the end of the cycle. However, when we move down, people get hit. Their real estate gets hit. Their stock portfolio gets hit. A lot of people get hit down and never get a chance to come back up. Usually it's because of the bad debt that they hold. Maybe they lost their job during that period of time and they kind of got into this rut. But that's the whole point of the cycle. It's to push the maximum amount of people down so that we get fewer and fewer and fewer people at the top. What they say is we need to tax those people at the top and redistribute the wealth back down to the bottom. But there has never been a case in which that has actually worked. If they were to tax all of these billionaires at 100%, 100%, all of that money pushed down, it would have no impact on the greater good. It might have this slight effect immediately, but what happens the next year? Nothing. And that's just the way it is. We have to realize the taxation system cannot resolve anything. That's the fraud. It's used to push people down. That's why they exist. Do you understand that when you say, the roads and bridges, who's going to build them? What's going to happen? The vast majority of the money that goes into, let's just say, infrastructure, roads and bridges, it's people with collars on in their meeting rooms, figuring out where they're going to put the next thing. They sit down, they go whining and dining all these different companies, trying to find the best person there. They've got season tickets to each and every one of the sports teams, spending all of your hard-earned money, and then eventually the pennies that are left over get put into the infrastructure. Why do you think the infrastructure is so bad? Why do you think this school system and education system is so bad? Because the money doesn't get used on where it should be. It's used inappropriately and it's squandered. This is just basically highlighting interest rates, about the job market and so on, as well as cross-country movers largely undeterred by high mortgage rates. People together, the point is, what we are looking at right now is that people are pushed to the edge. They realize that, but they're all hoping that the Federal Reserve is going to change their tune. They're going to flip and reverse, pivot, and they're going to do so in 2023. If that happens, and they do pivot in 2023, then we got to see what happens. They could actually figure out a way to kick the can down the road, and only time will tell. However, if they don't and they extend that out into 2024, this will be devastating. I want to see what goes on. I will bring all the latest and greatest news to you. Make sure you subscribe down below. I'll see you tomorrow. Take care.